Hello, you are all welcome to my channel once again. I have to introduce myself to those who are watching me for the first time so that they will know their teacher. My name is Daniel Amwako, and I'm an ATCA chartered accountant. I provided accounting services such as bookkeeping and others, including teaching accounting for more than 20 years. And the purpose of creating this particular channel is to teach accounting so that those having problem with accounting will overcome it. I don't want to waste your time. Let us get into the video. Those who have watched my previous video know how I teach. I teach by using notes, and the notes have been simplified in such a way that even if you are non-accountant, you can understand it. So let us go through the notes. Introduction to the balance sheet, the basis. Please pay particular attention to this particular subject. The balance sheet is one of the most important subjects in accounting. No matter your qualification accounting, if you cannot prepare a balance sheet, no organization will employ you. Even if they employ you, they will later also, because an accountant who cannot prepare a balance sheet is not worth it for. So please pay particular attention to this particular subject. I'll go through step by step with you, and it's the basis in the sense that the balance sheet involves a lot. I cannot teach all at a go, so we teach it. I will teach it gradually, step by step, so that at the end of the day, you're able to understand. You can easily prepare a balance sheet. So let us continue. Our learning objectives are: 1, meaning of a balance sheet; 2, explaining the meaning of fixed assets, current liabilities, long-term liabilities, and capital. 3, explain the sequence that they appear in the balance sheet. 4, draw up a balance sheet from information from the trial balance. Okay, so let's start. Meaning of a balance sheet. When we say a balance sheet in accounting, what's the meaning? The balance sheet comprises of those accounts with balances that were not included in the trading profit and loss account. All these accounts that continue to have balances must be assets, liabilities, and capital. The balance sheet therefore indicates the value of a business at a particular point in time. Let me explain. Normally, this is how we prepare a balance sheet in accounting. First, you have a transaction. Then out of the transaction, through the double entry concept, you prepare the ledgers. Then at the end of the month or at the end of the year, you close the ledgers. When you close the ledgers, then you take some of the entries to the balances to the trading profit and loss account, so that you can prepare the trading profit and loss account. But preparing the trading profit and loss account, every balance remaining should be taken to the balance sheet, and they are what? The asset. They can be asset, liabilities, and capital. Please, I've made a video on all the topics. I've made so many videos on all the topics. I have video on accounting equation, the double entry, the trial balance, closing account, and so forth. You can click on the link below, the show more section. You click on it, you see all links linked to all those videos, so that you can go and watch it. Please go and watch it. It will help you a lot to understand accounting and be grounded and how the fundamentals in accounting work. Accounting in such a way that it's a principle. When you don't understand the principle, you cannot move forward. Just putting up a building. When you put up a building, the foundation is weak, the building will collapse. So if you don't have solid or your foundation in accounting is not strong, you cannot move on the account. The higher you go, the more you encounter a lot of problems. So go and watch those videos. They are very simple that even non-accountant can understand it, so that you really understand all these concept, principles, and so forth. Let us go. So, asset. What is an asset? Asset earlier assets were not bought purposely for resale, but to be used in the operations of the business for a long time. That is anything owned by the business. We have two types of assets, namely current assets and fixed assets. I think this one has been well explained. An asset purposely what those properties bought by the business with the intention of not reselling it, but what to be used in the operations and the running of the business. They are assets, and they are classified into what current assets and non-current assets. Okay, let's look at what's a current asset. Current asset. This is used in the business for a year and as such used for a short term. It is listed in the balance sheet in increasing order of liquidity. Sorry. That means those assets further away from being turned into cash and end up with cash itself. So let me explain. When you see current assets, they are the assets that they are going to be used within 1 year. And it has been arranged in the balance sheet according to what in order of liquidity. That those assets that are far away that cannot be easily be turned to cash comes first, then cash will appear. That's what they are what the current assets. Let us look at some example. Examples are one. We have inventory. What do we mean by inventory? It's the closing stock at the end of the period. After the trading period, whatever stock is remaining, you say that it's inventory. Receivables. All those who owe the business at the end of the trading period. So those who are indebted to the business at the end of the period, they are receivables. Prepayment. Prepayment. This is services paid for in advance by the business. It is for services not provided for or consumed for yet, though its treatment will be considered later on. For its inclusion will make the preparation of the balance sheet complete. So what is prepayment? The business may pay for a service, but they will not consume all the service during that particular period. So that is what we call prepayment. It has been paid in advance, but all has not been consumed yet. The reason why I will make a video on it later, but I'm including it here because if it's not included here, then we can't prepare the balance sheet. That's why I've included it here. Though later on I will make video on it. Let us continue. 3. What is cash? Cash at bank. When we say cash at bank, what does it mean? That the III, it means what? Balance of bank balance for the period. So at the end of the trading period, when the balance sheet comes, or in your cash book, whatever balance is remaining, we say what is cash at bank. Okay. The next one is cash in hand. They are all fiscal cash at the hand. I take it again. All fiscal cash at hand as at the end of the period. So whatever cash that will remain, that the fiscal cash that you can handle, that will remain at the end of the period is called what? Cash in hand. Okay, B, fixed assets, fixed or non-current assets. What are they? These are assets to be used in the business more than 1 year. They are listed in the balance sheet, starting with those the business will keep the longest, down to those which will not be kept for so long. So what is fixed asset or non-current asset? They are the assets that the business is going to use in the operation of the business for a long time. And they are presented in the balance sheet according to what? Those that will keep for a long time first, then followed by those that will keep for a short time. Okay. Now we look at example. When we say fixed asset, what are examples? They are land and building, fixtures and fittings, machinery, and motor vehicles. Okay. Let us look at the format. The format for asset. You have the fixed assets, land and buildings. Then motor van. Then we have machinery. Then we have features. So we add up all to get what? The total of the fixed assets or non-current assets. Then we come to the current assets. Inventory first. Then receivables, prepayment, bank. Then cash. We also sum all up all. We sum up all. We sum up all. Then we get what? The total. Then we add the fixed asset total or non-current asset total to the total of the current asset, so that we get what? Total assets in the business. Okay, let us look at example. For example, from the trial balance of Jones, prepare the balance sheet as at 31st December 2020. Jones trial balance as at 31st December 2020. We have here the transaction. This is how we prepare trial balance. As I said, I have a video on this, so you can go and look and watch that particular video. Transaction, then the debit, then the credit. First capital, $250,000. Cash, $15,000. Land and buildings, $80,000. Inventory, $10,000. Fixtures, $35,000. Receivables, $5,000. Machinery, $40,000. Bank, $45,000. Prepayment, $2,000. Profit for the year, $32,000. And motor van, $50,000. All will sum up $282,000. Then the credit also $282,000. So the debit side is $282,000. And the credit side is what? $282,000. So it has balance. Let us use this figure in preparing the. We are going to use all these figures in preparing the balance sheet. So that's the solution. This is how we prepare balance sheet. Balance sheet for the year ending 31st December 2020. So normally the balance sheet, you have the name of the company at the top, then the balance sheet pertaining to that particular period. Okay. So let us go through. Fixed asset, land and buildings, 80,000. So when you go up, you have land and building, 80,000. Motor van, 50,000. So we have motor van here, 50,000. Machinery, 40,000. We have machinery here, 40,000. Then we have fixtures, 35,000. So we go here. This is the fixtures, $35,000. Okay. So we total all up, you add up all, and the total fixed assets is $205,000. Then we go to the current assets. We have inventory. Inventory is $10,000. So inventory, $10,000. Receivables, $5,000. Receivables, $5,000. Prepayment, $2,000. Prepayment, $2,000. Then cash at bank, $45,000. Cash at bank, $45,000. Then we have last cash, $15,000. So we have the cash of $15,000. We sum up all the current assets and it's what? $77,000. We add it to the total of fixed asset $205,000, and we have total. We have total assets of $282,000. It's financed by capital, $250. We have capital, $250. And we have the net profit, which is $32,000. So there's the net profit. Profit for the year, $32,000. So when we total all up, it is what? $282,000. Let me go over again. So the first assets, land and buildings, $80,000, motor van, $50,000, machinery, $40,000, fixtures, $35,000. We sum it up, $205,000. We go to the current assets, inventory, $10,000, receivables, $5,000, payment, prepayment, $2,000, bank, $45,000, cash, $15,000. We sum it all up, it's $77,000. We add to the total of the fixed asset, $205,000. We have total assets of what? $282,000. And it is financed by the capital, $250, and a net profit, $32,000. Then the total will give us $282,000. So you see that the total asset is equal to what? The capital and net profit. When you prepare your balance sheet and it doesn't balance, it then means you have a problem with your account. It can be from the trial balance, or it can be for the ledgers. So you have to go back, and even when you prepare the trial balance and the ledger, you have a problem with the ledger. There's a mistake in the ledger. It doesn't even balance. So you have to go back and check. But once it balances, then it means what? Your entries are okay. So that's what it's been. I'm just reading what I've explained. The fixed asset summation is $205,000, and it consists of what? Land and buildings, $80,000, motor vehicle, $50,000, machinery, $40,000, fixtures, $35,000. That's the 205 fixed asset, as I've explained here. This 205 consists of land and buildings, $80,000, motor van, $50,000, machinery, $40,000, fixtures, $35,000. So that's what I'm explaining here. So that's a $205,000. Land the building, $80,000 plus motor vehicle, $50,000 plus machinery, $40,000 plus fixture, $35,000. All the fixed assets should be depreciated, but this will be considered later on. Also notice that all the fixed assets have been arranged according to how long the business intends to use them. So when you go through the fixed asset, look at that arrangement. You see, they are going to use land and buildings longer than motor van. So it's first the motor van, the machinery, so forth. So according to how long they are going to use, as I said. And all should be depreciated. But as I said, the balance sheet, it involves a lot. We cannot treat all at a go. So later on, I will do the depreciation, how you depreciate this asset. Okay. The total of the current asset, $77,000, is inventory, $10,000 plus receivables, $5,000 plus prepayment, $2,000 plus bank, $45,000 plus cash, $15,000. As I said, yes. How did we get the $77,000 as current assets? And yeah, inventory $10,000, receivables $5,000, prepayment $2,000, bank $45,000, and cash $15,000. So notice that it has been listed in increasing order of liquidity. As I said, those that are far away from capital, they come first. You see, inventory far away from capital, all those will be receivable and so for prepayment, then the cash, bank and cash is. as it has been agreed. The total assets are what? $282,000. Why the fixed asset $205,000 plus current assets $77,000, as I said. Total fixed asset $205,000. Total current assets $77,000 or $282,000. And is then financed by owner's capital of $250 and profit of $32,000. As I've said, owner's capital $250, and then you add the net profit $32,000, and it's $282,000. Okay. This also confirms the accounting equation of assets is equal to what? Capital. That we have the assets of $282,000 equals capital of what? $282,000. The capital plus the net profit. So that's the accounting equation. Or I have video of them so we can go and watch it. Now we go to our second topic. That is what? Liabilities. What do we mean by liabilities? Liabilities, when we say liabilities account, it means those individual organizations that the business owes or is indebted to us at the end of the trading period. Anything that the business owns to anybody else apart from the owner. Okay. There are also two categories of liabilities, namely current and long-term liabilities. So liabilities simply means that those that at the end of the trading period, the company or the business will be owing. Apart from the owner, anybody that the company is owing, you say that what? It's a liability. The owner is capital. The business owns the owner capital. But apart from that, anybody that the business owns, you say that's what? It's a liability. And they're also into, we have two types, the current and long-term. The current and long-term liabilities. So let's look at them. A current liability. These are liabilities to be paid within 1 year. The liabilities, when we say current liabilities, those that will be paid within a year. Okay. These are examples. Payables, those that the business is indebted to at the end, indebted to and be paid within a year. As I said, the business can be organization or an individual that the business owing an amount at the end of the year, but usually it should be 1 year. They've been giving the business 1 year to clear that particular debt. Accruals, services that the business has consumed but has not paid for. This is also be treated in future. Its inclusion is for the reason that it cannot be ignored in the preparation of the balance sheet. It cannot be ignored in the balance sheet preparation. So what do we mean by accruals? At times the business will consume a service, but they will not pay for it within that particular year. They will pay at a later date. Normally, it's within 1 year. That one we say what is accruals. As I said, I will make a video on it later on. But the reason I've included is that if I exclude it, we cannot prepare the balance sheet. That one I've included. So we come to what? Overdraft. What do we mean by overdraft? Indebtedness to the bank for an amount overdrawn. And normally, a business usually they have a credit balance with the in the bank. But at times they will agree with the bank, and the bank will allow them to draw more than what they have in the bank. And that one is what we call it overdraft, which is also a form of short-term debt. Then we have short-term loans. This is money the business borrow from the bank or other organization to be paid within a year with interest. So where they borrow money from a bank or any other organization, and it should be paid within 1 year, and there's an interest on it. We say that it's a short term. It's a current liability or a short term liability. Okay. The formats. So we are continuing the format. So the format, we know this format already, but let's go through it. Fixed asset, land and buildings, this amount. Motorbike, this amount. Machinery, this amount. Fixtures, this amount. So it gives us a total of fixed assets or non-current assets of this figure. Okay. Then current assets. We have inventory, this amount, receivables, this amount, prepayment, this amount, bank, this amount, and card, this amount. Then we sum it up, we get this total. Then we have the current liabilities, and current liabilities should be deducted from what? The current assets. So the current liabilities are payables, this amount, accrual, this amount, overdraft, this amount, short-term loan, this amount. This is the total. Then the total, we deduct it from the current asset so that we get this amount. This amount is what? Net assets or capital employed. It means that it's the capital that the company are using to run the business. We call it capital employed. Then we take this capital employed, then we add it to the total of the assets. When we add the total of the asset to the capital employed, so when we add the total of the asset to the working capital, then we get capital employed of this figure. Let me go over this again so that to be well understood. We have the fixed assets, land and buildings, this amount, motorbike, this amount, machinery, this amount, fixture, this amount. So the total will give us a fixed asset or non-current assets of this figure. Then we have the current asset, which is inventory, this amount, receivable, this amount, prepayment, this amount, bank, this amount, and card, this amount. The total will give us a total of current assets. Then we deduct all current liabilities. So it's payable, this amount, accrual, this amount, overdraft, this amount, short-term loan, this amount. So we get this figure. This is the total of the current liabilities. Then we deduct it from the total of the current assets so that we get the working capital, the net current liabilities or the working capital, which is this figure. So we take the net current liabilities or working capital, then we add it to the total of the fixed assets or non-current assets so that we have a total capital employed of this amount. So the capital that is being employed in the business is this. So we have a working capital that the amount of money that the company is using to run the organization within a short period, within 1 year. That's why it's what? The current assets minus current liabilities within 1 year or within 1 year. Whatever they are using to run the business within 1 year, we say it's what? Working capital. And when we take it working capital, we add it to the total of assets, we get total capital employed in the business. That the capital that is being employed in the business to run the business is what? Is this particular figure. This is what? The non-current asset or the fixed asset plus the working capital. We get what capital. Then it is financed by what? The owner capital of this. Then you add what the net profit of it should be. So that means the capital employed should always be equal to what? The capital of the owner plus the profit. If you, at the end of the day, you prepare your balance sheet, and as I said, it does not agree that the capital employed does not agree with the what? With the amount financed by the owner, that's the capital and the net profit, then it means what? You are wrong. You have to go back and check either it's from the trial balance or it's from your ledgers. Okay, I've explained, but let me go through them. The total of the current liabilities is deducted from the current asset to obtain net current assets or working capital. As I said, you take the total of the current assets, then you deduct the total of the current liability so that we get your working capital. This is the amount being used to run the business. Okay. The working capital is then added to the total asset, and the result is what? net asset or capital employed. So when you get your working capital, then you add it to the total fixed asset or non-current asset, you get your capital employed. This means the total monetary value of the resources that are being used in the business. As I said, that is the amount of money employed in the business, and it is the same as capital added to the net profit, as I explained. I think I will end here because I said the balance sheet, it contains a lot. We cannot treat all within one day or one period. We should go step by step so that it will be well understood. So we will end here. Next time I'll continue from where I've ended. Next time we are going to look at an example where what we done up to the assets, that the current asset and the fixed asset. That's what we just added the current liabilities. But we are going to stop here. Next time we continue from where we stop, the current liability. We look at the example. The trial balance has been given you, including liabilities, current liabilities. How are you going to treat it in the balance sheet? We look at it. So we will stop here. In my next video, we continue. Please go. An accounting is a principle, and the more you watch it, the more you practice it, the more you become perfect, the more you understand the principle well. So please go over this particular video several times. As I said, accountant who cannot prepare a balance sheet is not an accountant. So watch this video, you can upload it and watch it several times and make sure that this particular one that we've treated, it has been well understood. And where more questions, if you need more questions, you can email me. I have my email, I give my telephone number, and then when you click on show message, you see there. You can email me so that I can give you the questions and so forth. And one more thing, as I said, I'm a chartered accountant, and I do bookkeeping and provide other accounting services. If you want somebody to keep your books for you or provide any other accounting services, you can contact me. My email is there, my telephone number is there. And also the student, the accounting student, those who are facing problems in passing the exams, accounting is difficult, but it's not difficult. It is not difficult in the sense that if you are serious committed, then you practice a lot, or when you watch a lot of videos, you learn, you sit down. You have to sit down, otherwise you can't pass any accounting exam. So if you need help, please contact me. I'm willing to help you. I'll be very, very happy. And what gladdens my heart is when I teach students and they go there and pass the exam. It really gladdens my heart. I want to help you. So if you are facing problem in passing your accounting exams, let me know. Whatever problem that you are facing in accounting, let me know. Contact me so that I can help you to pass your exam. As I said, I've come to the end of the video. Please like and also share this video. When you do it, to motivate me to do more videos. And also comment so that whatever I've made mistake, I will correct it so that I can give you better videos. And also subscribe. When you subscribe, every week I'm making videos. When I make videos, it will be sent to you free of charge. You are not going to pay anything. So please, we have come to the end of the video. Please listen to my advice. 1, watch the video several times. 2, practice a lot of questions. Sit down and learn. When you're accounting, you don't sit down and learn, you won't pass. So sit down and learn. If you have problems, let me know. I'll be willing to help you. Also, if you want to acquire accounting knowledge by a businessman or non-accountant, you can also contact me. I will teach you. And I teach in such a way, I simplify accounting in such a way that even a kid or somebody who have not seen accounting book before will understand it. So bye till I see you in the next video. Bye.